Good morning, everybody. Thank you for joining. This is Dee Dee with Power of Three Trading. I'm not here just to teach you the strat, but teach you how to profit from the strat techniques. If you have any more questions regarding the strat, please reach out to my guy, Rob Smith, at Smith's in the Black channel, Rob in the Black on Twitter, or at sepiagroup.com. All right, so yesterday, we didn't do a video. I had some things I had to do in the morning. But before I left, we kind of looked at the Tesla gapper. And so we'll talk about it today. All right, so we drew our broadening formation off the daily chart. I'll just blow it up so it's a little easier to see. And Tesla was gapping in this range. So we were expecting price action to gap above the previous day's range, right? And then we were going to use our average daily range to help us with, hey, is this going to continue? Is it going to reverse? So we just drew our broadening formations on the high because that was the direction Tesla was gapping. And so here we drew this line from this 2-up bar over to this inside bar here. And then we drew a horizontal line because I didn't like the angle because as you could see, we're trying not to go back, 100 days here. So we drew a horizontal line here on this 2-up bar, and as you can see, it just actually opened right at the low right at this, the high of this bar, blew through this guy here. And then we drew our next broadening formation here from this outside bar to this 2-up bar. And I said, guys, we're in the 800s now. So it took that as well. All right, so let's look at how you would have gotten into this trade, right? So I have up my 618.90. And I know we had been talking about this, the hourly. I'll change that to the hourly for those folks. All right, and so we have our average daily range set up, right? So again, I talk about that in my Benzinga video, how I use average daily range. If price trades above that range, all right, a close above the ADR, I'm looking for price to continue, right? And then if it trades back down below average day, the high of the average daily range at ADR, maybe a potential reversal with CCI given some confirmation. That never happened. So it was a continue, guys. It was a nice kicker. So I missed the opening 60, but here's what you saw. And I'll do a replay on this 6 minutes so you can see it. The challenge here with Tesla was, the entry. Okay, we'll have to catch you up a little later on the indicators. All right, so the challenge with Tesla was the entry, right? If you were trying to trade this at the open. So let's do a replay on this. So I don't like to trade in that opening 18. All right, and so here's what you have: price trade gapped up, right? So okay, again, guys, this is a gapper, so we have to be careful that price doesn't trade back inside the previous range. So here was, right, so we talked about this. This was our opening broadening formation we drew, right, based on where price was trading in pre-market, right, this 2-up. It opened, traded just below that range at the open and continue higher. But here's where we have our average daily range. But we also have that other broadening formation, this two up bar. Isn't that interesting that they almost line up exactly? And so this is where I was saying, if you have trouble drawing broadening formations, you can use your ADR, and just understand that we like to trade reversals off of the high of that ADR, right, to the downside, and to the upside off of the low of an ADR. But you have to be careful though when price crosses above it, and then just kind of trade parallel to it until we get another move to the upside or the downside, right? So that's where we CCI kind of helps us. But here's what happened in the first 18 minutes. Now we have a 2 up here. Remember, we talk about this, we have been talking about this all week, is which time frame are you looking to take your signal? I like to take my signal off of the 18. So here's a 2 up, here's a 2 up. So you have to be careful if you try to trade this inside 6. All right, let's roll it and see what happens. It goes inside, it goes 2 up, goes 2 up, and comes right back down. Now you're here, guys. So if you had taken this and it come back down, this is that next 18 minutes. So inside, 2 up, 2 up. You have to be careful that, because again, hindsight's 2020. We don't know. We don't know if this is going to continue or not. And so we're not shorting here, but we're also trying to protect any profits or minimize our loss. CCI starting to cross back over. So if you had gotten in here off of this 2-2 continuation using the inside bar off of the 6 minute as your signal, this goes 2-2 against you. Yeah, you may want to just get out of the trade and wait for a better entry. But this is where trading Tesla becomes a bit of a challenge, and you see it crosses over here. Because if you're in a small account, you've already taken, I don't know what which strike price you use would have used here, but you've already used one entry if you're in a small account, and that could have taken your entire account value. And so you wouldn't have had an opportunity to get back into this trade. So here we are. And this is why I said, we're going to go ahead and take our given an option. You probably took a small loss here, but just think about it. If you had taken this entry off the 6, remember, you're a 2-2, right? So this is a continuation pattern. You're hitting some level of exhaustion because of the big gapper. It has gapped above the high of its average daily range, and this is Tesla. And so now you're looking at a little exhaustion. So that's all this had. This was a TTO. If you had gotten in here, you got to get out. We teach this every day. If you go take this entry, crosses back over, we're exiting this position. Why? Because we don't know what's going to happen next. We don't want to take big losses. We're going to exit here. Price comes inside and then goes 2 down right here. Is this a reversal? Not at all. Here's your 60, guys. All of this is happening in the first 60 minutes. Your next flip happens right here. So we're not reversing here. I mean, look at this, right? 60 was gap up. If for nothing else, it may trade inside. But look at your CCI, very strong, very strong. Way above 100, way above 200. This is at 300 on the CCI. So we're not shorting Tesla today. We're not shorting Tesla today. So let's roll it and let's see what the next move is. All right, price trades back up. Okay, so now you're here. Okay. All right. So here is, you had the inside 18, it goes 2 down, comes right back up, right? Comes right back up. Now you have a 1, 2, 2 rev strat. Now you're in your 60-minute flip. Keep in mind, this was the high here. So I'm just going to draw a line here at the high so we can see that this is the high. Again, to continuation, guys, we're looking at where we're going to enter now. We're trying to get back into this trade. And so when you are looking at two continuations on the 60, it's got to take that high, but where do we get in? And so this is where I had suggested earlier in the week, if you're using the 60, use your 6-minute cross. And so when price crosses back over 100, that gives us some confirmation that the momentum of the trade is still to the upside. Okay, remember, CCI doesn't give us direction. We're just looking for momentum similar to volatility or volume. Okay, we're looking for momentum to drive this market higher. All right, so let's roll it, see what happens here. So it looks like it wants to go higher. It does right here. And I'm going to pause because I'm going to tell you what I did and lost money. And I didn't chase the market back into, and I just missed it. And so ticked off. I actually took this entry right here when it crossed over on the 90. Okay. Here is the 90-minute flip, guys. 90-minute flip. I took this entry here. I got triangled out. But as you can see on this CCI, it never crossed back over. So now I'm frustrated. And of course, I'm trying to do too much because I have another gig going. And so I entered here, got triangled out, took a small loss. Let's roll it. I'm just not in a good mood. So again, here's why we exit, because we don't know. We don't know. Remember, this goes 2 up now on the 60, right? Right here. We drew this line. It took the 62 up and then it comes right back down. Okay. How do you play this? I'm still looking for CCI to cross back above 100. It does it at the 11:24, the last 6 minutes, guys, in this candle, in the 60 candle. So remember, it opened here, it traded down to our average daily range in that second 60, traded up to, took the 60 higher, TTO'd again, came back out up above above 100, back above the 60, took it green again. I'm sorry, it was already green, but took the high again, took this for opening 60, which should have been my entry to begin with. This is the last 6 minutes in this candle. I should have waited for this crossover. And now I'm holding to see if CCI crosses back above 100 on the 6 minute. Still good. Comes down, does not go 2 down, still 2 up, still above 100 on CCI, and it becomes just a very tight range here, right? So now you have difficulty entering, and what does it do? It hits the top of our range here, and now you're in the 8s, and it keeps going. And as you can see here, I never get my entry, so I'm waiting for CCI to cross back over for me to get another entry. And I tell you, it was tough. It crossed over here, but at this point, it's already hit our target. And you can see now you're in some tight ranges here. This is this doji here on your 60-minute candle. I'm certainly not chasing. at this point, I have missed the market. And so I'm frustrated. Right. So comes back in, you would have been out of this trade. It actually holds this broadening formation, but I'm out of this trade. Why? Because of here. CCI comes back over, crosses up again here, but then tight, guys. Here at exhaustion, not making any money here. Not making any money here. And then you can see that what that looks like on the 18. You got these 2 2 2 2s. This is not how we want to trade when the market goes 2 up, 2 down, 2 up, 2 down. This will get you killed, and you can see it goes inside 60 here. Not where we want to be trading, right? So at that point it was, the market was over, and so I missed it. I'm mad, but you can't go jumping into this market once it hits your target, because then those ranges got really tight. We'll just stop this because we're done. All right, so let me go back here just so you can see that. Here is where I got in on the 90 flip. I got TTO, got sidetracked, missed this move right here when it crossed back above, which should have been my entry to begin with. I jumped it right at that 90 flip, got TTO, took a small loss, did not get back in, guys. I missed my opportunity. And here is where the money happened. If you had missed this opening 90, right? So this was the 60 flip. Had you gotten in there, but I personally don't like those moves because there's so many TTOs that can happen in that inside of 60. Because remember, you're still inside 60 here. So I don't like this move. The way I teach it is I want CCI to cross back above 100. I jumped in here because it gotten close. It went inside, came right back down, frustrated me. Somehow I got sidetracked. I didn't even see this, but then it crossed back over right at the last 6 minutes of the 60-minute. So bottom of the hour. And then this was your move to the next broadening formation. Because remember, I still draw my BFs. So this crossed back above my broadening formation, traded right to the next broadening formation, and traded above it, came back down, and then once it crossed over, I would have gotten out of this trade, but I missed it. And you can see here in the 18, it went red, it went 2 down. Frustrating, but here's the message. This works very well. If you were just trading off of the 60, my preference is to get in before that, right? So using your 15 or your 18-minute signals, right? So this is the 15-minute flip here at 10:45. That was in here. CCI is still above -100. It crossed over a little early here. 18 works a little better for me on that. But this was your 15-minute flip. So it went 2 up, 2 up, 2 up, 2 down. TTO reverse on the 15, but here's your 60 flip here. Goes 2 down and then 2 back up. You could have taken that and used the low of this 15 as your stop loss of the entry, the candle that you entered in, because this became your right here. You turn, where did it flip? Right here. Yeah. So here you're green on the 60. You're green here on the 60. It goes 2 down, 15-minute flip, 2 up. You're green on the 60. You could have taken that entry pure strat. All right, and just use a 15-minute as your target stop loss. All right, 2 up, 2 up, continuation, 2 up, continuation. You never got another 2 against you, and that's why I said I missed the market, because once it went 2 down, and let's go on the 18. and my 90. Once it went 2 down here, 2 back up right here at 1042, you never got another 2 against you. Had I gotten in here before the 90-minute flip, I wouldn't have gotten TTO, right? Because it never got 2 against me on the shorter time frame. But but I waited and then got in right at the top of that range and got TTO. So T two 1, 2, 2, and you could have taken this entry here, right? At the 1042, not using CCI, pure strat, taking that entry here once it crossed above it right in this range, and use this guy as your stop loss, the low of this that opening candle. If it crossed back over, again, because you don't have the momentum, if it crossed back over, you just would have gotten out. All right, because it flipped here, came down. Actually, it traded above that high right here. Yeah, it traded above that high right here and came right back down. That's why I don't use it. Tricky, tricky, tricky. But if you had gotten in and it went 2 against you here, which got close, then you would have just exited. So if you've taken the high of this range and it traded right down on you, if it went 2 up, 2 down, you would have had to gotten out of that trade. But in this case, it did not. It traded 2 up, 2 up, 2 up. Never would have taken your stop, which would have been the low of this candle that you entered in here. All right, that was Tesla, guys. And boy, what a breakout. Because we had looked at it on the longer time frame and we said, yeah, it's stuck inside this range. It was stuck inside a 3-week inside. It broke out finally yesterday and it continued. And so it may be hitting some some exhaustion here. It's this 2-day, today starts a new 2-day and 3-day flip. And so was it 825.36 is the high of this guy. And then you have this high here is 845. But I'm not going to chart it. Why? Because I mentioned this earlier. It's now out of my range. I cannot trade Tesla in the 8s. All right, it's gotten way too expensive for me. All right, so let's look at the stock screener. I need something else to trade. What's my new go-to stock, guys? We have a couple stocks. Coinbase looks like it's trading up almost 3%. DoorDash, that's 2.8%. Google Class A is trading down. Roku is trading down, but that's been a beaten up stock. MU and Meta. So let's see what's on the list for us to look at for today. Out of there. All right, that wasn't on the list. Okay, so Meta's gapping down. But look at it on the week, guys. Let's just start here. It's Friday. All of these popped yesterday. Coin is gapping up. It was inside day. Maybe we'll take a look at that. DoorDash is gapping up to up on the weekly. It was inside day. Did they report? No, they report next week. August 4th, okay. Etsy again, but look at these moves, guys. 2 up, 2 up, 2 up. Goog. Yeah, no, we're definitely not touching Google. Look at this mess. On the weekly. Yeah. Okay. Outside 2-week pattern, then it goes inside. Yeah, we're not touching that. Roku again. Yeah, no. MU Why are the semis trading down? It broke out of that range on the weekly as well. Took this gap and then it came back down. Could take that week down. I don't like any of this, honestly. Let's look at Meta again. I don't like any of these. Yeah, I don't like any of them. Let's look at the indices. All right, so SPY broke above. Look like it's trying to take that. We have this. Let me just blow this up. Trying to take this gap here, guys. Let me just put a line here. The low here is 401. That's key area. So we'll see. Like I said, today is a new 2 and 3 day pattern. I'd be careful that market doesn't trade up or in reverse. The semis are trading lower for some reason. Again, gap here. It looks like it barely. That's the low is 232.27. It just missed taking this gap here, so it could just be some exhaustion here, guys. I don't have IWM up. Let me see. Yeah, same thing. 187 on that guy. I'm sorry, the low here, 183.53. Yeah, I think we're just at some exhaustion. So what do y'all want to trade? Let's look at NVDA. We got this hanging man pattern here. Semis look like they want to trade lower, but look at this, guys. We talked about this the other day. Market traded above 100, probably going to go higher, and it certainly did. So weeklies are green. Your full-time time frame continuity other than the year, time frame continuity on these guys, inside month, inside quarters. I don't like anything to trade today. So I'm going to use NVIDIA since I got to come up with a new stock. We'll we'll chart it because I got to come up with a new chart for my account. And let's see what this looks like. All righty. This is tight. You can see this small doji pattern here. I'm going to look to trade the reversal on this, guys. Let's just blow it up. The 90. All right, so we know we have to get outside of this range. It traded 2 up, so we're just going to draw a broadening formation here and look for, if it's going to go higher, it's got to go above this range, right? So above yesterday's high. And because this was an outside open, it's got to go take this guy as well. So essentially trading below yesterday's low average daily range, right? So we have this outside bar here, but because this was higher, we're going to take this highest high, right? High of the day to this next highest candle inside this range. We're going to take this outside bar here. This is actually lower, 175.38, 175.45. We could do that and say it's got to close below this range here. All right, or we can do that. I'm okay with it either way, because here's the answer. It's got to trade below this range. So let's just do this. Let's just do this. It's got to close. It's got to take this low. Right, so this is 175.38. Here's what I'm looking at, guys. If we got a 3 here, we have a 2 here. So it's got to go 3, 2 up, 2 down. And I'm going to draw a horizontal line here because I don't see an angle that I like. All right, so Here's what I'm looking for on NVDA, and we'll use our average daily ranges. If price trades below this guy here, 177.46, I'll look to short because I don't want to be inside this range. You see how it traded yesterday? Why would you think it would trade any different today? So we don't want to be stuck inside here. We have an outside bar. We have a 2 up. So the short, I'm looking for this to go 2 down. This will be my first target, right? Which is the low of this guy. And then of course, we'll be looking for ADR to form at the open and see if we have an opportunity to continue this lower. Using your actionable signals, you have to decide for yourself. Are you using the 15, 18, 5, or 6 to enter the trade? So once price trades below this range, I'm looking for my 6 or 18 to give me my signals, okay? You can decide whether or not you want to use the 5 or the 15 after price trades below this range or above this range. And then any reversals, remember, if we're looking at reversals, CCI has to cross back below -100. We don't want to try to trade that. If it's a gapper, you may be able to, they're tricky, because if they're above +100, below -100, you're probably going to get a move and then a TTO. If that thing is going to reverse, it's going to probably be a little choppy until it crosses our 100s, okay, on the 18 or the 30, if you use the 30 minute. All right, so that's what I got for today. We'll wrap up with my script. Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. And I can tell you, I know this from experience, guys. When we start jumping in and out of trades, we don't have a plan. We're likely gambling, likely guessing. We have not set up our signals, so that means we're just thinking this is going to happen. Wait for your signals, make your move. It goes against you, you're exiting. All right. Happy Friday, everybody. I hope you enjoy the rest of your day and your weekend. Take good care.